Welcome into the Book It podcast. Today, we're going to be talking about P&Ls and more specifically, how to read your P&L in a way that helps you save thousands, tens of thousands, or even hundreds of thousands of dollars every single year. You ready? I got 4 activities for you today that are going to help you knock this out of the park. In just 15 minutes, what you will learn at the end of this will help you save thousands of dollars on your bottom line. So let's dig in together. One of the first things that I request from a potential client, or after I've already started to work with them, is their profit and loss statement. The profit and loss statement, or the P&L, is designed to give a very clear snapshot of top line revenue and bottom line profit within a business. And today, we're going to be reviewing what that is and how to effectively utilize that in your business, not just as a tool to understand the snapshot of that financial information, but even better, as a tool to help us perform better within the business. A profit and loss statement is the revenue minus your cost of goods sold minus your expenses equals your net income. Purchases are usually categorized based upon how they fit into the business. So you're going to have some categories that might be transportation, it might be fuel, it might be new inventory. It could be any number of things within the business that is an expense, categorized in as many different ways as there are businesses. The format is typically viewed monthly, year to date, or based on a full year. Typically, when I go into a business, I like to see the last 3 years of a P&L. 1 year is good data. 2 years gives me something to kind of base that data against. 3 years shows me a very clear pattern within a business. If someone were to hand me a single month, I can extrapolate a lot of information from it, but what I can't do is compare that data to understand the larger picture within the business. One of the things I'm going to talk about today is how a P&L is a story of a business. And that story is built through data across time. Before working with a business or while working with a business, what I want to know is, what is the story of this business? Where are they going? What are the things that they're struggling with? And if I look at year-over-year data, and especially month-over-month data between years, that's going to tell me what are the months that they're struggling in. Are they typically growing in some of those months? If November or December are typically bad months for you, but we're also seeing 3 years ago, one number, 2 years ago, a bigger number, and this past year, an even bigger number, that shows some growth. If we're showing that it's flat, that's going to tell us a different story. If it's showing that it's declining, yet again, another and separate story. So what I want to know is, what's the story and what's going on with the business? And even more, what are we going to do about it? Because every business, you can tell what their priorities are based upon what they're spending their money on. Different businesses can have different strategies. They're going to invest more heavily in certain things and less in others. And that's different across industries, and that's different within industries. So by looking at those trends, we can understand quite a bit of what's happening within a business. However, only looking at your own data can lead you astray. It can tempt you to think, well, this is how every other business is. My labor cost is really high because every other equipment or event rental company's labor cost is also really high. And maybe that's the case, but maybe not. So how do we get that data? Well, we benchmark. Benchmarking is a tool that I've utilized with a lot of clients. And effectively what that is there are companies out there that will give you data and they will benchmark that against other companies within the industry. And what they're going to tell you is, what is that threshold of what good and healthy businesses within this industry have for certain ratios within their business? So if your profit percentage is a very specific percentage, is that good or is that bad? I've worked in industries where the profit percentage that's healthy within a business is at 40%. And you might be looking at that thinking, what a great profit percentage that is. I've never gotten close to that. Well, perhaps in your business, in your industry, that isn't quite the same. In some businesses, having a 10 or 20% profit percentage is either expected or it's pretty good. So we have to understand that data, that financial data within your business, especially as it relates to the industry itself. I have benchmarking reports from 2026, and I typically get these every single year. So if you specifically run an equipment or event rental business, please reach out to me. I give these away for free. So there's nothing that you need to do. Just shoot me an email at brendan@brendanmorancoaching.com, and I'd be more than happy to send that your way free of charge. Now, let's look at the meat and potatoes of why we're talking about this. Because now that we understand that your P&L paints a story, and it helps us identify trends, and we can understand a lot about your business, what does that information get us? Let me share with you an experience that I had one of the first times I managed a P&L within a business. I went into this business and it was operating at a very low profit percentage. I was told there's a lot of issues going on. There's a lot of turnover in the staff. We're really not 100% sure what's going on. The previous manager has moved on. Not sure if that was by choice or not, but huge problem location. We need someone fresh in there to help turn this around. I came in there and the first thing that I did was I pulled the P&L for the location and I started to go line by line through each section of the P&L. And if I didn't have access to what was behind that line item, I asked for the information of what was behind that line item. Because sometimes we have hidden costs that make their way into a very specific line item, and either A, it should not be there, or B, we've just taken it for granted for so long. So one of the first things that I look at is, what are my highest costs within the business? It could be labor. Well, there's nothing I can do about my high labor costs, says the business owner that does not know that there is 1,000 things out there that they can do to help lower their labor costs. And I'm not talking about paying people less. I'm not talking about firing or laying people off. There are a lot of strategies to help manage your labor so that way it doesn't get out of control. I worked with a manufacturing business years ago, and they had a particular employee that was the crux of the operation. Without him, the rest of the work doesn't get done. That individual knew that. They relied on that individual for years to work 60, 70, 80-hour weeks. He was paid hourly. And so by the time I arrived in the business, this individual was very burned out, was very highly paid, and so would never go to another business. And the business was incapable of scaling beyond their current bottlenecks because everything had to flow through one person. What they really needed to do was document every single thing that that employee could do, and then hire and train other people to support in that. That would help them expand their operation and to do it profitably. The amount that they were paying one already highly paid individual, especially when you add in all the overtime, they could have hired 2 or 3 other people to help support this person. And they still could have given this individual a raise, but lowered his overtime. So that way the business itself could flourish. And I'd like to think that when the business is able to flourish, its employees are also able to flourish. I'm not going to sit here and tell you, hey, let's move people out of the business. Let's lower people's pay rates. There are so many more effective ways of managing a labor force, especially in equipment and rental businesses. I've added a lot more work onto a calendar while my labor costs have remained more or less flat. And the trick in that is identifying very creative solutions to help you avoid adding in those additional labor costs. That could be effective routing. It could be hiring people in specific locations. If you know that you go to a particular location that's further away, rather than paying someone locally the travel costs to go from A to B, hire someone that's very close to B and have them arrive on site to help with that. That's an event rental strategy that I utilized very effectively. So when we're evaluating this, what we don't want to do is look at a number and just say, well, that's just how business is. My thought is, if we have a very high number, if we have a high cost within the business, then we need to look at cost reduction strategies. Now, I'm a fan of going in and finding all the small things that can help make something big, but that should be our second or third option. We want to take something that's already big and we want to figure out how to lower that, because a 5 or a 10% reduction in this area might mean a whole lot more on the P&L than finding 5 or 10% of something that's a lot smaller. So that's strategy 1. Look for all the big things and find ways to reduce costs in each of them. And you might tell me, well, Brendan, I have rent and I can't just pay less rent. Well, have you asked? You might be thinking to yourself, I can't ask. There's a lease in place. Well, of course, there's always a lease. There's always a contract in place. But if we never ask, we'll never know. I've worked with local property management companies that are far more likely to work with a business owner than some larger corporate property management companies. And even then, a corporate property management company especially depending on what the market and environment is within property management, which as of the recording of this in 2026, the pendulum has swung back to the side of the lessees rather than the lessors, then at least opening up a conversation could be helpful. And even if there's maybe not a reduction in the cost that you're paying per month, perhaps there is something else that you can get out of it. Maybe you're paying for the landscaping on your property and you want to go back and renegotiate and say, hey, we really feel like this is something that should be covered by the property management company. We would like to open up that topic of conversation. There are ways of negotiating with people to get more of what you want. And so there's a ton of strategies that I've employed to help customers and businesses that I've worked with reduce their costs by 6 figures. Sometimes all you have to do is investigate and make the ask. And even then, sometimes you'll actually have a vendor come back to you and suggest something wildly better that you weren't even going to ask for. Just an absolute gift. Next, number 2, look for optional expenses and recurring expenses that are a little bit lower. So we're looking at subscriptions, we're looking at maybe softwares or other services that your business pays for and utilizes on a recurring basis. And there's a couple of tips I have for you here. So sometimes what'll happen is you're paying for a service. So that service costs this much and you're using this much of that service. Well, wouldn't it be nice to pay less for that service? Absolutely. How can you pay less for that service? Well, again, if you don't ask, you'll never know. Open up a thread with that vendor and start asking them questions about the service. Initially, you're probably going to get a, no, we don't really do that with our service. And again, there are negotiation tactics to help you keep that conversation thread open and get what you want. Ultimately, every single person you talk to is very similar to you. They're running a business. They're trying to make money. They're also trying to keep their customers happy. And so while they may say, and they may very accurately say, well, we don't typically do that, there's always an exception. Look at every single expense. And especially if something can be eliminated, go ahead and just eliminate it. One thing that I see is a very reactive form of looking at finance within business. And I'll give you an example of what that looks like. Let's keep an eye on this for the next couple of months to see if it's really a big need. I'm a bigger fan of better to ask for forgiveness than permission. Go ahead and cancel it. See if anyone notices. If no one notices, then you never really needed it. If someone did notice, they're going to tell you pretty quickly that they actually needed it. Now, I'm not saying don't communicate any of these things within your business. Rather, what I am saying is, I think we need many of these things far less than what we initially thought. Additionally, you might find that one service can do 10 of the things that you're also paying another service for in something else. So if there's a way to consolidate, do that. Step 3, when I'm reviewing a P&L, the other thing that I'm looking for is if I have a high cost and I don't have a vendor that's willing to play ball with me, who is someone else that I can introduce into that conversation that may give me a better rate? I'll use my own finances as an example of that. Almost every single year, I go out into the market and I try to find cheaper car insurance or cheaper health insurance, cheaper anything. As long as I know that my threshold of what I personally need is met, I have the right coverage, I have the right deductibles, anything else outside of that, if it's less, why am I going to complain who I'm sending my payment to every single month? As long as it's less, that's really what matters. And unfortunately, so many companies out there will offer you less than their competition to get you in their door. So for people like me that play a little bit of a price game, at times I search for the deal, I get a better deal, I lower my costs. Now, not everything comes down to cost. So my one caveat within that is this: just because something is cheaper and looks the same does not mean that it is the same. So be very conscientious. If you're getting a great service from a specific vendor, be careful, especially if that cost difference is not very much, then the cost to switch may end up being just as much as staying with that vendor. Or if it's really large, you have to ask yourself, what is it that this other vendor is not doing that this other vendor apparently is? And might that explain the cost difference? Cheaper is not always better, but when we're running a business, we do want to see where the two of those intersect so we can figure out what's the best price and the best quality for what it is that I'm looking for. Number 4, the next thing that I look for, areas on the P&L where I have avoidable costs. So let's go back to the example of my finances. So one thing that I can't help but pay every single month might be my rent or my mortgage. Those are things that I'm not really going to avoid paying. I have to have a place to stay. However, there are expenses that I can control. So an example of that might be my eating out budget or my food budget. Now I have to eat some at some point in time. Maybe it's $1,000 is a month that's good for me. But if I notice that I'm spending $1,500, well, that's going to signal to me that I'm spending too much on my food. My eating out budget is, I don't know, $500 a month. But let's face it, I could cook all those meals at home. I could actually taper that all the way back down to zero. Now, in this case, that probably means my normal grocery budget might increase a little bit. Either way, when we look at a business P&L, there's going to be a number of line items within that business that are, let's just face it, they don't have to be there or they don't have to be as high as they are. So let me give an example of a P&L that I saw within a business. They had tens of thousands of dollars in unbilled damages that happened by customers that were never billed. The easy answer on that is, if we spent a little bit of time bolstering this process, how might that affect our P&L? So too often what we're concerned about is increasing that revenue number. All the while, our margin might stay fixed. I've helped businesses make 6 figures more in profit without ever increasing their revenue. And the way that we've been able to do that is by lowering their operating costs, specifically the costs that should never have been there in the first place. So to continue this very same example, I helped the business implement a 1-minute process at checkout and a 1-minute process at check-in that saved them $70,000 annually in unbilled damage in just the first year. So as we're looking at that, would you invest with your team an extra minute on your checkout and an extra minute on your check-in to save $70,000? I mean, that's a no-brainer decision. So again, as we're looking at the P&L, we are looking for something that raises a red flag. We're investigating it to find out why. And potentially, we are putting something in place to help adjust or fix that. So that's number 4. And with that, that's all I have for you today. If you enjoyed the way that I typically work through a P&L with my clients, hit that like or subscribe or whatever the platform is that you're on. Go ahead and follow me for more. I'm looking forward to seeing you the next time on the Book It Podcast.